The U.S. labor market added 50,000 jobs in December, below expectations, but the unemployment rate did fall to 4.4%. To discuss whether the report could influence the Federal Reserve's upcoming rate decision, let's go to Thierry Wizman, global FX and rate strategist at Macquarie Group. Thanks for joining us today.
My pleasure.
So a much slower pace of job creation in the U.S. Is this still sort of uncertainty from employers about the strength of the economy?
No, I would say that the job market data we've been getting is certainly not consistent with a significant slowdown in the economy. In fact, to the extent that we are seeing any indications of a slowdown in the economy in the last few months, it's been coming mainly from the labor market data. Most of the other data is not suggestive of a slowdown. In fact, you saw the third quarter GDP growth numbers come out at 4.3%, and the preliminary indications for where Q4 is going to come out in terms of GDP growth are also pretty robust right now. So, as I mentioned, there has been a slowdown in payroll growth, but in part because of strong productivity gains, and in part because that slowdown is mainly being driven by supply side factors and not demand factors. It doesn't seem to be consistent with anything approaching a recession, let's say, and largely because of that, there really isn't going to be any important need on the part of the Federal Reserve to cut rates when it meets later this month.
Okay, so there was a revision, as you know, of the 76,000 fewer jobs for October and November. That doesn't concern you then?
No, not really, because certainly the data collection process was affected by the government slowdown. The government shutdown. The government shutdown itself may have affected job creation, including in the private sector, not just in the public sector. So, but that was an anomaly. It's not something that was permanent. And as long as we do not get another government shutdown, let's say at the end of this month, at the end of January, then this should not repeat itself. Right now, the U.S. economy seems to be growing, at least in the latter, at the end of 2025, at a pace that's commensurate with maybe above 2%. And we don't expect a slowdown from there in the early part of 2026.
One of the unknowns that we're beginning to factor in, of course, is AI and the efficiency side of it, right? All the backroom jobs that could be lost to those upgrades in AI. Is that sort of contributing at all to your outlook for 2026?
Well, it's certainly contributing to the strong productivity gains that we might. It certainly could have been responsible for the strong productivity gains we saw reflected in the numbers that came out yesterday in the U.S. But I want to be cautious here. To the extent that AI has been affecting the job market, if at all, it's been affecting the job market mainly by reducing the pace of hiring, not by creating layoffs. So to say that there are job losses, that's effectively a nuanced view, right? They're only lost relative to where they might have been had there not been an AI revolution taking place. The other thing, of course, is that AI, to the extent that it is changing modalities with respect to how companies produce what they produce, it also creates some uncertainty, and certainly that uncertainty may have delayed hiring as well. But I want to be clear here. We're not seeing a pickup in existing workers getting let go. We are merely seeing less hiring, and for that matter, that less hiring is concentrated among new job entrants or supposedly new job entrants, people coming out of college and schools.
Do you see that changing, though? Do you see AI in the future, perhaps this year and into next, beginning to take more jobs where you could see the layoffs as opposed to just sort of reducing the hiring trend?
We certainly think that it could be something that affects the job market with respect to particular sectors. Certain sectors may be affected, but in an economy that's as dynamic as the U.S., in which wages are flexible and can adjust, we see AI prospectively producing job growth in other sectors. So the net effect, of course, is not going to be made clear for a while, but there's no reason to believe that on net we're going to see a higher unemployment rate, let's say, in the economy overall because of AI.
Okay, I do want to ask you about the U.S. Supreme Court decision that's expected on the American tariffs that were put into place last year. And I'm wondering whether you have a concern about the payback Washington could have to do if that court rules against the administration.
Right. So this is important because the Supreme Court has to rule on whether the IEEPA tariffs are legal, but also it has to make a ruling on whether or not the government has to refund the tariff revenue that was already collected in 2025 and partly in 2026. That could amount to about $150 billion. It's not all the tariff revenue that was collected. It's maybe a half to two-thirds of it, but it's not an insignificant sum. And of course, the federal government doesn't have just $150 billion lying around that it's been keeping in its vaults, ready to make that refund. The concern of the bond market, of course, is that if the Supreme Court orders the federal government to make those payments in fairly short order, the government will have to issue bonds, and therefore the supply of bonds will go up. To some extent, the bond market has been worried about that. That increased supply, but the Supreme Court typically takes into account the practical implications of its rulings. So even if it said that the government had to refund the tariffs, and there's no clarity on whether they will or will not, they may not say that it has to be done right away. It may rule or suggest or guide the government towards a lengthier refund period. And certainly the government may put impediments in the way of claiming those refunds, making it difficult administratively to file the claims for refunds. So we shouldn't be overly concerned until we actually see what the Supreme Court says and trust the court to make the right decision in this regard.
Got it. Terry Wizman, sir, got to leave it there. Thanks for joining us today.
My pleasure.